Welcome to the strategy outline, the how and the why. With any trading strategy, it's very critical to understand, obviously, the how, but even more important than that, the why. Why are you doing this certain strategy, or why are you considering it? What can it get for you, and what risk do you have? So let's go ahead and get started. This is honestly, it's a pretty simple concept. What you need to have to do it successfully is an eye for the trend. And this isn't as complex as any of the other strategies that I have. Honestly, you just want to eyeball it. Is it going straight up? Is it going straight down? Or is it a mess? That is what I mean when I say an eye for the trend. Within this class and when I use this strategy, I didn't use any type of specific rules such as, oh, it's underneath, it's above the 21 EMA or it's below or anything like that. I really just eyeballed it and said, okay, look at it as if you're a 5-year-old. Is it going up? Is it going down? Or is it messy? The next piece of that is going to be the list of stocks that fit my parameters. So you need some rules for which stocks belong on this list. You also need the list of stocks. But the reason why the parameters are important is because you may have another stock that you want to add to this list, and it might work great with the strategy. So that's why I include the parameters. Now, number 3 is very critical. With any trading strategy, you need to have a defined entry and exit point. This strategy is no different, and you need to know when to get in and when to get out. Number 4 seems obvious, but critical piece to mention. You need to have knowledge of the strategy and the setup. You need to know the how and the why. And then you need to know our goal. What is the goal of this strategy? The goal of the strategy is slow and steady income. This is not, multiplying 1 to make 4 overnight. It's slow and steady income. And so the great thing about this is that you can add 2, 3, 4 strategies together. And then at the end of the day, what you have is something that you can use to make you money on the slow and steady, something that you can use to make money on the directional, and something to make money on the explosive. And that is what makes you a well-rounded trader. So let's talk about this for a minute. Each strategy is different. Why is this one unique? Well, this one's really unique because it is high probability and high risk. I have to put this in here, even though it's really interesting because, yes, in dollar amounts, it's riskier because of the risk reward. However, the probability is very high. So with trading, what you're going to find is that, when you have straight trading strategies that work 90 to 95% of the time, they're going to be smaller gains. Okay, that's just the way that it works. And then when you have trading strategies that work like 60 to 70% of the time, they're going to be larger gains, but you're going to have losses, 30 to 40% of the time. So you just have to decide as a trader what you like. And honestly, I think the best thing is to mix them up. So what is the 7 stock strategy? Well, these are small wins, but they're using relatively little strategy or work, and they add up over time. It requires a very small time. And the best part of this is that it can be honed to maximize gains. So like I said in the introduction, what I did was I started off with this strategy and then I honed this over time until I reached the Stack Profits methodology, and that is what I detail in the last chapter of this class. So if you want to learn about how to maximize it, I even included my 5-star strategy. So make sure you check that out. But keep in mind, there are always trade-offs. So gains are smaller than in strategies that require more effort. So there's a few things to keep in mind. First of all, what's important to you? High probability or gains? Easiness or gains? These are just 2 different things. So with this strategy, the reason why risk control is paramount is because, you're generally risking 3 to make 1, but if you're batting at 90% of the time, you're doing really, really good and you have a nice solid, rising equity curve. Second piece of this is that normally, you know me, I don't hedge very often, but when you're doing a strategy like this, it is a good idea to have hedges on, and also to use a smaller percentage of your account than what I would use for something like directional trading. Number 3, alerts help. So when you're not watching the market all day long, it is very helpful to use alerts to make sure that in case the market is falling apart and you're not paying attention, you're going to be aware of that, and then you can log in and adjust your positions. It doesn't happen very often, but there have been some times where we have a flash crash in the market, such as Brexit, something like that, that the market will move very quickly, so it's nice to have alerts in place. Then the last piece of this is that the strategy can be honed to equal more profits, even if that means slightly more work. So let's get into this. Why 7 stocks? This is because every stock, like a person or like a child, they have their own personality. And when you trade the same stock over and over again, you get to know them, you get to learn their personality, and that is how you get even better and you can nail the moves on these tickers. Yes, there's something that can be said for using scans, watch lists, multiple services to find new trades. But you know what? If you only trade the same ones over and over again, you get to know it, how it normally moves, and when it does have an abnormal move, you'll know what to do with it. So I want to talk about for a second about how I elevated my trading, because I think this is really important, and in the end of this class, it does come full circle. So like we've discussed, I started with the 7 stocks to success method. It's my income-based trading strategy. I used a calendar. I used the same stocks every week, and what I did was I was selling out of the money premium. I put them on, I took them off like clockwork. I didn't pay attention to a squeeze, I didn't pay attention to fib, I didn't pay attention to anything else besides standard deviation, premium selling, a calendar, and if the market was going crazy, which I only noticed based on my alerts. But the majority of the time I was with my son at the park or something like that. So what happened was after, I don't know, I think maybe 2.5 years or so doing this all the time, maybe it was a little bit longer. Actually, now that I think about it, it was probably about 3 years. I advanced to the 5-star method. So what happened when I was watching these same tickers all the time, I discovered a rule set. Okay, this is a rule set that I didn't have when I first started using the strategy. And I said, you know what? These tickers all fit this exact same pattern, and they fit this type of rule set that I can use to make money. And so what I did was I went from using kind of like a 3-to-1 risk reward situation to where I modified it to use a 1-to-1 risk reward scenario. And so of course, when you're doing that, you go from selling out of the money premium to at the money or in the money premium. So while the dollar amount is less because you're risking 1 to make 1 or you're risking 2 to make 1, at the same time, it's lower probability because you are now at the money or in the money. So what I did was I used the 7 stocks of success tickers as my base, added on additional names, honed entries on pullback buys. So this was where I got to the point where I was focusing on a directional trend following strategy, and I really upped my game with technical analysis. The next piece of that is going to be Ready Aim Freedom. For those of you who've taken my classes before, I'm sure you've heard of my Ready Aim Freedom class. This is a class where I focused on adding in the squeeze. So I added the squeeze, I added the Ready Aim Fire, and I focused on long calls. So if you imagine this, I mean, this is your equity curve here. Slow, steady, slow, steady, slow. Okay, next, get a little bit better on your gains. Ready Aim Freedom, once you can add the at the money put credit spreads plus long calls, then you're looking more like this. Because you'll have those, movements in here where you have a long call and then you have premium down here. So that was really what enabled me to start really adding some gains to my account. Now, after that, I focused on mastering finding Phoenix. So one of the things that used to frustrate me so much about the market was I hated pullback days in the market. And I had a hard time looking at them and figuring out, okay, well, what should I be trading? What should I start with? Where do I need to look on these type of days? And what I noticed through trading the previous few strategies that I mentioned was there were certain stocks and specific sectors and industry groups that really looked great on pullback days. So I wanted a way to quantify that. I wanted a way to quantify, okay, well, which one is better than the other to buy on a pullback? How do I know where to look? How do I know what the best one to buy when bad news hits? So for that reason, I created a rule set that allowed me to focus on the strong stocks on a technical pullback buy by comparing relative strength based on the ability to rise on the dips, and I wanted to couple that with strong fundamentals and hot industry groups. So that is where I got to finding Phoenix. And now the next piece of that is stacking profits. So after this whole journey, I've gotten to the point where, now I'm using directional butterflies, upwards, downwards, and I'm really able to maximize my profits. So, I know that all of that isn't necessarily a part of this class, but I did want to discuss with you the reason why I started at this point and where I'm at now. So when I use this strategy, that is what I focused on. I only focused on the calendar and the calculator. And at this point, I do like the explosion of the squeeze, but there are so many people who just love this type of strategy. So I'm going to give you the strategy that worked for me over the course of 2-3 years that really enabled me to support myself with my son. So let's go ahead and get into the strategy outline.